Welcome back to Fast Market, everyone. Kevin Hinks back here for our second segment of the show. Nick Theodorakis has agreed to stick around and spend some time with us. And now I'd like to bring in our guest for this segment, and that is co-founder of LikeFolio.com, Mr. Landon Swan, to the show. He's here to talk about our feature stock of the day, and it's featured for many reasons, Landon. Tesla, they released some deliveries over the weekend. Good numbers, record numbers, more than a year ago, but not up to Wall Street's expectations, but that's okay. The stock's still up $48, Landon. What are you seeing about the increased or consistent popularity of Tesla Motors?
Well, this is a revolutionary company. I mean, they have changed the automobile landscape. Fantastic job. I mean, it's one of my favorite entrepreneurs of all time. Side note, that Twitter buy is pretty spectacular, so that's going to be an interesting shakeup. But also, this is a company that has completely changed how the automotive industry is looking right now. And you've got a lot of other, Me Too type companies popping up, these other EV companies, and they're all way behind, but they're getting a lot of buzz. So Tesla's leading the pack. They're doing better than all the traditional automakers with our data. They're a little bit behind as far as increase in purchase intent as some of their competitors, but it's also really, really small numbers. I mean, if you're talking about like a company like Rivian, they're at plus, I think, 180% year over year purchase intent change, but they've delivered 900 cars, right? Tesla's delivering about 3,500 a day right now. So they're still leading the pack on that. Doing very well, as you can see, against all the traditional automakers, and their happiness is also very strong. So better happiness than most of the traditional automakers, and a little bit behind some of the EV ones. But again, Lucid's delivered 300 cars so far, Rivian's 900, and the other one, Fisker, hasn't delivered one yet. So they're not really part of the conversation just yet, but it is something to watch out as they come up. The concern, though, with Tesla is they have a 230 PE ratio right now. They're only about 9% off all-time highs. The stock is doing very, very well. They've struggled a little bit with chip shortages, mostly supply chain issues coming from that as well. So they've got some problems on delivery, but their pace is continuing to increase. Now, if you look at how their purchase intent has gone over the last few quarters, the problem with Tesla is that it's slowing down. Their growth is slowing down, and that's what we like to look at LikeFolio is how has it changed. So if you look at how it was just a little while ago, we were looking at plus 52% year over year. That's from 2 years ago to last year. And now, even though we're at all-time highs on purchase intent on a quarterly basis, that pace is only plus 3% year over year. So it's slowing down a little bit, and no investor wants to see that. Even though you're at all-time high purchase intent, extremely high happiness, everybody loves the car, it's fantastic. The growth slowing down is tough because we talk about this on the show. If you've got a PE ratio in the 200s, 230, I think right now, anything that's showing any kind of slowdown is going to multiply on the downside, just as acceleration will multiply on the upside. So you're really getting stretched out a lot, and that's a little bit concerning to me. So they report in about 2 weeks, LikeFolio data, and I personally love this company long term, but I'm not buying any shares until after they report. I think maybe Wall Street could be in for a little bit of a disappointment just based off of, again, the growth. Even though it's at all-time highs, the derivative of that is slowing down. And I don't think anybody wants to see that.
Landon, Wedbush is out this morning with a $1,400 price target and some interesting stats on pushing out some of their production capacity just because of all the slowdowns in China due to lockdowns and from Q1 to Q2. And, so I think some pretty, technical analysts look at what's going on there. But how do you consider, when you look at that purchase intent, how do you consider this industry, I guess? Maybe it's not the most unique, but it feels like it, where some of these companies, to your point, have literally never produced a product, right? Versus Tesla, which has relatively high market saturation or penetration, I guess is the right way to say it. How do you factor in the penetration of their sales and their growing sales into that purchase intent? How do you factor for the idea that so many people have bought a Tesla relative to their competitors?
Sure. So, well, if you go back to a few years and Tesla, if you looked at the purchase intent chart of Tesla, it was screaming off the charts. Now, relative to today, it's extremely low. But back then, before they delivered cars, it was very high. So we were bullish on Tesla, back in 2016, 2017, because those bars, if you compare them to the previous bars, are really high. They're small compared to the ones now, but it was big growth. And so I think a lot of people maybe dismissed that and didn't understand what the demand really was. People really were looking forward to these cars, and everyone sort of wrote them off. That's why you've got these perma bears on Tesla just continually getting crushed, because they didn't understand how important consumer demand is. So if you look at Rivian, for example, that plus 184 purchase intent year over year, that is what I would say a little bit concerning. They haven't delivered many cars, 920 so far. So they haven't delivered many, but Tesla was in that same boat 4 or 5 years ago, 6 years ago. So they're coming up. We'll see how they do compared to Tesla. Tesla's by far the leader. They've got the most penetration. Absolutely. If you've ever ridden in one, you're sold. I mean, they're unbelievable cars. But you got these other guys that are up and comers, and of course all the traditional automakers are converting, getting a lot of electric vehicles out there. A lot of it has to do with gas prices. I mean, people talking about gas price concerns, that's plus 400% year over year, and also the autonomous vehicles, the automatic driving, that is huge. So that's plus 80% year over year. So people really want these features. They want to get off gasoline. They want to get the safety features and the ability to drive autonomously. Tesla's leading the pack, but they've got 3 companies that are coming after them. We'll see. I think Lucid is really falling behind, but the other 2 are making their claim that, hey, we might be able to get there as well. We might be able to compete with Tesla one day. We'll see. So I wouldn't write them off. We're going to need to see serious deliveries, serious follow through from them over the next few years before it's a real concern, but they're on the map of concern right now.
Landon, in terms of deliveries, the Model S and Model X, they delivered 14,724 cars. That's actually up 25%. But the Model 3 and the Model Y was 295,324 cars, but that was actually down slightly. Landon, are you seeing any problems in that perspective? Like their growth is coming from the S and the X, and actually not from the biggest seller. Is that any kind of a red flag at LikeFolio?
Yeah, so the models breakdown is really important. The Model 3 makes up almost all of their sales. I mean, it is a huge percentage of their sales. You can see the Model Y is the fastest growing when it comes to people talking about which brand they're talking about or which model. But the Model 3 is second, and we're seeing some growth through that. The X and the S are actually, we're seeing them kind of less relevant, as well as the Cybertruck, which has not been released yet. So, anytime you have a car that the high models are 60, 70, 80,000, maybe 120,000. And then you've got this much more attainable Model 3 that's in the, 30,000 or something like that. It's going to lead the pack. But I also think that you get that in front of people, it could be a stepping stone into something larger. But of course, the more affordable car is going to be the one that's leading the pack. But that is the one to watch because it makes up all of their sales. So the fact that it is a little bit slowing down, the growth is slowing down, that's a big concern. But I don't know that it's from demand as much as it is from a lot of chip shortages and supply chain issues. I mean, this is a very chip-heavy car. All cars are now, but these are some of the most heavy when it comes to chips. So I'd say that's a big concern. The purchase intent is a little bit of a scary issue. Again, it's plus 3% year over year. It's better than it was, but it used to be plus 50% year over year. So anytime you get that situation, you're setting yourself up for a little bit of a disappointment when you've got a PE ratio as high as they do and expectations as high as investors have for this company.
Yeah, if you are one of the world-class growth stocks and the energy is for growth, you need to continue to show growth for that energy to remain. And you're right. The China factory is currently on pause now because of what's going on with COVID. And there are supply chain shortages. There are other issues with some of the cars, yet they were still able to put up relatively good numbers. I think they missed the expectations by about 7,000. I think Wall Street analysts wanted 317. It came in right around 310. But they've got, It's funny, Elon Musk put on Twitter this morning, Berlin rocks, right? Which means Berlin is getting ready to go. They've got Texas, Austin ready to go, Shanghai, Fremont. So this company is still, expanding its footprint and getting ready. Landon, give us your final thoughts on Tesla in terms of the problems they have and the opportunities they have. And of course, Elon Musk.
Sure. So I think that's really the story, is you don't bet against Elon Musk. You can ask a lot of broke perma bears who've been short, that forever. Just been getting murdered on Tesla short. You just can't bet against the guy. He's one of the greatest entrepreneurs and innovators of our time, of all time, really. And the company is now, that used to be, they'll never be able to build that. They built it. They'll never be able to deliver it. They're delivering it. So long term, I'm a huge fan of this company. I think I'm going to tap the brakes a little bit and pause until after they report, because I think there's a chance that they could come back a little bit on the report based on slowed down growth. But then I'm jumping back in on any kind of dip. Just looking at the deliveries, they're at a pace of about 3,500 a day, over 1 million. And if you look at GM and BMW, they did about 2 million, Ford's around 4 million. So Tesla is a major player. They used to be written off as you'll never be able to deliver these cars. And just as you mentioned, they're ramping up production. They are going to be, over the next 5 or 10 years, the car company. So long term, super bullish, never bet against the guy. Short term, I'm going to wait till after they report.
Landon Swan, co-founder of LikeFolio.com. Thank you so much for coming on, as always, bringing the LikeFolio data to Fast Market. Have a great day, Landon.
Thanks, guys.
All right.